It's not going to be one theme. It's, $67 billion went into VC in the last cycle. There's a bunch of people building deep tech, but there's a whole group building the applications layer. So music and NFTs, and I know at least 20 people, 20 groups working on that. And if I know 20, there's probably 2,000 groups or 500 groups working on that. We've got fashion, all the cultural stuff, fashion, entertainment, sports, they're all working on it. We're seeing a lot of that. Entire finance system has put its hands up and said, yeah, we're building this stuff too. Everybody's building on blockchain. Every bull market, you need to have various 5 and 10% corrections. They're healthy. What needs to happen? The NASDAQ had its best start to a year almost in history. It's still up 30% after a 10% pullback. Normally these things are very healthy to see. What we are seeing, and I can see it confusing a lot of people, is this bifurcation where the old economy, stuff like the Russell 2000 is hitting new lows because the Russell 2000 is pricing in today's economic conditions, which are pretty soggy. They're not great, right? Are we in recession? Are we not in recession? But we're there and thereabouts. NASDAQ discounted that all last year. And so NASDAQ has been on a tear, much like crypto has, because they're forward-looking assets based around a secular bull market trend. So for me, I look at the technicals, and I think there's a decent chance we could put the low in equities, particularly the NASDAQ, S&P, others, today. That's my general view. We'll have to wait and see, because I'm not a short-term guy, but I know where the trend is going. Don't forget, election cycle years, this looks identical to the average election cycle year. You always get this correction of this magnitude. It finishes around now, and then normally it goes up into the end. For both the pre-election year and just the general seasonality. So that's good. Liquidity, even though it feels like liquidity is coming out of the market, if I look at the Fed net liquidity, it's actually been rising slightly, slowly, but rising. So we're not seeing a liquidity draw from markets. We're seeing China stimulating. So that's global liquidity coming. I think any day now, the Japanese will come in and intervene in the currency market and or the bond market. That'll be stimulus. The Europeans were out today or yesterday saying they're done with rate rises most likely. Okay, so that changes the liquidity environment. It doesn't yet make it positive, but it makes it less negative. The US looks like it's done as well. We've seen several of the Fed members saying, we're done, let's wait and see. So on balance, things are more positive. So if technology is forward-looking, then you would need to ask yourself, as Stan Druckenmiller said, you need to ask yourself what the economic condition is going to be in 6 months or 12 months' time. Are rates going to be this high or lower? Is liquidity going to be here or higher? The idea that the world is going ever more digital, the software is eating the world idea that Mark Andreessen said, is so bloody obvious at this point. I mean, here we, 3 of us are, in 3 different countries. 5 years ago, Maggie, we'd have had to have a satellite link to do this with television crews. If not, we'd have to fly everybody to a studio in New York. Right? All of this is just a manifestation of where the metaverse is going. It's the digitization of our lives. That doesn't mean we don't enjoy the beach here in the Cayman Islands, that we all, just live with headsets on. But it means that the digital world, I'm sitting around me and I've got Bloomberg screens, other screens, all of this stuff. That's just a noisy mess. Sooner or later, it just becomes 3D immersive abilities, whether it's with or without headset. And then hologram comes after headset, and before you know it, everything digital and physical merges. We're all seeing that everywhere. And like it or not, those people who say, well, I think this metaverse is a bunch of, go and see what your kids are doing all day. And if they're not in the metaverse, that will be a huge surprise to me. So it is coming to our office environments. We now work from home. Why? Because of the metaverse. Right? Everything is digital. We used to have physical mail. Now we have digital mail. We used to have film with actual film, and now we just stream it digitally. We used to have to dial up somebody on a phone, and now we have these mobile phones that last everywhere. I'm here in Little Cayman, and why this image is good now, because now I'm on Starlink. I get 100 meg or 200 meg up and down in the middle of the Caribbean Sea. all of the digital world is coming at us so fast, and that is the metaverse. It just is the meeting point, it's the end game.
Embracing an unyielding enthusiasm for the crypto realm, Raoul confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Pal reassures that a long-expected surge awaits, leading up to the highly anticipated 2024 halving event for Bitcoin.
For me, there's a few people that come from my old macro world that speak new world. Dan Tapiero in crypto, Dan Moorhead in crypto. Geordie is exponential age plus crypto. You know, he's just a profoundly deep thinker, and it's just really enjoyable to talk to him. And his thesis is, which is actually parallels my thesis, is this is a digital nation state of crypto made up of sub-nations, and that the returns are superior and that it's going to eat jobs from the major economy because the opportunities are larger because the asymmetricness of the space. He's also like, you know, the return profile is so ridiculously prolific, even with the up and down cycles, that even with rates at 5%, he thinks they stay at 5%. You know, we had a discussion around that. He said that the issue is capital looks at that 5%, turns its head, looks at the S&P up 8%. It's like, well, you know, I was quite happy not to take the risk. You look at Bitcoin up 100% or Solana up 220%, and surely enough, money will leak into risk-taking. And it's something him and I talked about is the ETF. How I think of the ETF, how people should use it in the mental model is, if the digital nation state of crypto, new world, and TradFi, old world, what the ETF is nothing more than a trade agreement between these two countries. And the trade agreement, once it's put in place, doesn't necessarily mean the money comes in. It's the TradFi guys need to look at the crypto, go, there's higher rates of return, and right now that's proving itself. So the probability over time of foreign direct investment, FDI, coming from TradFi world into new world is very high. And then they will add a second trade agreement, which will be the ETH spot ETF. So if you think of these as trade agreements between these digital worlds, it gets very interesting. And that's what Geordie also talked about, was the competition for talent from two different countries. Old world and new world. It's very hard for TradFi to hire the best people anymore because they'd rather go to crypto. Why? Because they get paid more and the upside opportunities more. It's why AI is sucking in all the jobs and AT&T can't hire them. You know, it's a really different world we're going into, and this new world that I've always called the supermassive black hole just continues. And we've got 425 million active wallets now. By the time this bull market finishes in, let's say, 2026, there'll be 1 billion people using it. That's a country the size of China. They're just digital countries, digital nation states, that has allocation of resources, taxation, which is fees on for using the protocol. You even have kind of security costs, which is the same as military